Thanks everybody, and thank you very much for inviting me along to speak. It's always nice to fly over at the back of the plane with all the other mining executives now and enjoy the fine fare on Qantas, which is the very, very small biscuit, and had to actually have the full chocolate bar when I got to the hotel last night because there was not enough food on the plane. But we are travelling down the back, $200 return, I think it was. The story, it's actually great to see some old faces in the room. In fact, there's three of them sitting over on that table over there, and it's always nice to come over to the east. I actually grew up in Melbourne, and I've spent a lot of time in Sydney over the years, but a lot of my friends have moved up here. But I just, looking around the room, there's 5 people that I sort of recognise. Obviously Julian. Funny story, the first time I met Julian, I was actually on holidays in Perth, and I got this call from this bizarre guy who wanted to catch up about this new fandangled nickel story, which obviously is direct nickel. And I came into the office, and in sort of the school holidays, I think I was in my shorts and t-shirt a few years ago now, probably before the GFC, and I got this phone call. I'm downstairs and I haven't got any money to pay for the taxi, and I'm like, Julian, who is this bloke? He turns up to a meeting, he hasn't got any money, you know. But then it turned out he'd lost his wallet, and I think all of you who know Julian knows he can be a little bit like that sometimes, but we've formed a great friendship, and it's very nice of him to invite me along today. Some other old friends, just looking over at that table over there, Robin Boyer. Robin was the first guy that I got to know when I got involved in the zinc and the lead and copper business 26 years ago, working for a company called Australian Consolidated Minerals. I'd come out of university with a graduate in applied science, and actually my field of expertise was blow moulded polyethylene. So the only job that I could get in that area was working at the Ford factory in Broadmeadows making fuel tanks. And the other option I got was to go and work for Shell in the graduate trainee program. So I sort of thought about that for about half a second and went straight to Shell. They gave me a motor car and they let me travel all over Victoria selling lubricants. I was actually a lubricating engineer, which my girlfriend laughed a bit about. And then but I'd been at university, and so I decided I wanted to have someone else pay for my overseas travel. So I got a job with a company called Australian Consolidated Minerals, and my first job was to sell lead and zinc concentrate, which I didn't even know what it was, to the Japanese smelter pool. And I got introduced to Robin Boyer, and he took me up to Japan, and pretty much the rest is history. I've been in the industry for 26 years, and so Robin was my sort of first point of contact. So Rob, thanks for all of that wonderful knowledge that I hopefully rubbed off on me. And I do remember having a meeting up in, I think, Cairns. We met the Japanese halfway, and we had this very, very long and involved meeting, and I was a little bit tired. I'd probably been out on the Terps the night before. I was still young, 26 years of age, and I was sitting next to Robin, and I had one of those sort of events where I just started to take notes and the writing got bigger, and I started to dribble, and Robin just gave me a great big whack in the side, and I woke up and we ended up doing the deal, and it was a good deal. And then next to him is David Ross. After I left ACM, I got a job with a company called MPI Mines, and we had all this stuff called fine carbon, which turned out to be full of gold. And David and Kaz Copperberg, we did a deal, and I think we actually paid for the purchase of the gold mine, the old Stawell gold mine. I think we paid $6 million for it, and there was $8 million worth of loaded carbon with gold in the stockpile, and so we paid for it in the first 3 months when we found that stockpile. So David, thanks for getting us going there. Another old friend of mine is Richard McGrath. We've drank many beers together at the Clyde Hotel in Carlton. I was at Melbourne University, and Richard had a house just perfectly situated across the road. So it's just funny that you three guys are all sitting over there, because I've spent a lot of time with those guys over the years. One other guy I'd like to mention is Kari Aris out the back there. Kari and I worked together at MPI. Kari was an old Udukumpu guy, and I got my sort of training in nickel through the Udukumpu ACM relationship, which then became MPI Mine, Silver Swan, a very famous discovery which we developed and then sold back to Udukumpu. Then I left MPI to get into the laterite business, and Kari and I have been friends ever since. And him and my dad have a birthday on the same day, so it's good to see him again. And I hear he's moving back to Finland, but he told me he sold his house and bought a put option on the currency, so he's done all right there. Wish I'd done the same thing. So look, that's great to see some old friends, and I know that this is a sort of half serious, half joking sort of session, so I'll try and bring a bit of humour into it, but it's been a bit unhumorous to be involved in the resources sector for the last 12 months, so I feel like I've been sort of had the pineapple inserted without any Vaseline at all. So what I'll do is I'll quickly go through the story of Panoramic, quickly read that, and hopefully you've read that all and understood it all. So we'll talk a little about the history of the company, who we are, some of our projects, and where I see the future for our business and obviously resources, and hopefully we'll have a bit of a laugh as well as we go through it. So first of all, who are we? Well, as Julian said, we used to be called we used to be called Sally Malay Mining. And the story there is that when we bought the project, which was the original project that got us started, it was actually a nickel ore body in the Kimberley, which had been discovered by Anglo-American in the 1970s, been through a number of different owners, ended up with Normandy Mining, and they decided to sell it around about 2001. I was working for Joe Gutnick at the time, and the Cause project was struggling, as was his gold assets, and so I was looking for another job. A great couple of friends of mine in Perth, Harold Clough's son Bill, Alistair Cook, who a lot of you know through Exco and a few other companies, and a guy called Craig Burton, an entrepreneur in Perth. We all sat down at the Blue Duck Cafe and said, let's try and buy this asset. It was $1.8 million in cash, and Craig actually wrote the cheque out, didn't tell his wife. That was the money that he was actually put aside to build his house, and he actually wrote the cheque out. We got the asset, and then we raised seized money at 10 cents, and we couldn't think of a name to call the company, so we just called it Sally Malay Mining. Unfortunately, we didn't realise that it was also the name of a famous Aboriginal stockman who lived in the Kimberley, and he was actually quite chuffed about the asset being called Sally Malay, but he was also, his family was a little bit, because obviously there's that reference to dead Aboriginal people, so it just came to pass that the best thing for us to do was to remove that reference to a dead Aboriginal person for the best thing for the traditional owners and so on. So we did have a competition, and all the names that came up were basically, you know, Boab Resources, all good names, but they were already taken. So suddenly I thought, well, big picture, Panoramic, but it's actually the name of the street that I grew up in Melbourne. And so I did get the prize, but I did donate it to somebody else, so there you go. So what have we got? So we're a nickel company at the moment. We've got 2 nickel mines. We've also got a lot of platinum and palladium. I really like platinum and palladium going forward. We also have 2 gold assets, and so I'll talk a bit about those as well. So what on the list there is basically over 5 million ounces of platinum and palladium, all in resource, JORC resource, most of them with either a feasibility study done or an advanced PEA or a scoping study. And we've also got some nickel, copper and cobalt, which currently is our cash flow. We're currently in 2 geographic locations, Western Australia, still a good place to do business, and also in Canada. We've looked around the world, we've owned sort of shares in companies in different countries, but we've really discovered that our forte is developing projects in places where they don't throw things at you. They sort of do things the way that we do them, and we have a relatively small capital base, and so therefore we don't have an operating experience in Africa or South America or Indonesia or the Philippines, and so we've just chosen to stick to places where we know that we can operate. And that's not to say that those places aren't great places to do business, but none of the people in our sort of sphere have had a lot of experience outside Australia or Canada, so I guess we've chosen those 2 countries, and we still like operating in those places. In terms of our leadership, obviously you've got to have a good board, especially in tough times. A lot of you will know Brian Phillips. Brian I worked with at MPI for 10 years. There's myself, Chris Langdon, I went to university with. He's an ex-merchant banker and runs his own private business. The funny thing about Chris is, everyone in the resources sector is always very, very bearish on the currency, so I think it's going to 70 cents. Chris is an importer, so he thinks it's going to $1.20. So we always have these very interesting discussions in the board meeting. Hence, we rarely hedge the currency because we can never agree. But I think not hedging at the moment has been the right decision because I am pretty bullish of the currency dropping. John Rowe, I work with at MPI. He's been around the goldfields for a long time and very well known. He's on the board of Evolution. So a great board. Most of those guys have been there for the last 7 or 8 years. Very experienced management team. And in times like this, that's what you really need. You need the experience. You need the grey hair on the board because, you know, we're in a cyclical business and we're at the bottom of what's been a tough cycle. And obviously we're hopefully at the bottom on the way out. It's always darkest before the dawn. And I really feel that my board has been fantastic and the senior management there in really sort of keeping the faith and making sure the culture's right and really just coming in with a positive attitude, can do. And I think, you know, without that experience, sometimes people tend to sort of, you know, stray away from what's really important. A little bit of history about our projects. First of all, the Savannah project, which used to be called the Sally Malay Nickel Mine. That project has been around, as I said, since the late 70s. We bought it in 01. We financed it in 03. And in those days, it was an unloved asset. No one was really interested in it. And I guess the real difference between that project going and not going was finding the Chinese partner. That was Jingshuan. We went out on a global tender after we'd done the feasibility study. And in those days, we'd been chasing a high-grade nickel concentrate, plus sort of 13 or 14%, which was actually affecting the recovery. And we found this Chinese group, Jingshuan, that no one had heard of. This is only 12 years ago, which is is the biggest nickel producer in China. And they said, look, we actually can take your product and we can actually take a much lower grade concentrate. We like the low MgO. Can you make more nickel? So we said, yeah, we can push the grade down to 7%, get the recoveries up from sort of 73 to 80, nearly 90%. And it actually changed the whole metrics of the project. And instead of producing a separate nickel and copper concentrate, put it all together and we'll pay you for everything as a bulk concentrate. And that was the game changer that really turned that from a project that no one was interested in to one that was actually bankable. I'll never forget, we went out and it was very aggressive. The share price was about 20 cents where it is today. And we had to borrow about, all up we needed $65 million to build the project. Today that project would cost you $300 million to build. And we sat down with our bankers, Macquarie Bank and Standard, and they said, yeah, we'll lend you $46 million, but you need to get some money from the Chinese. They gave us $5 million US, which in those days the currency was 65 cents. That was nearly 10 million Aussie dollars. So then we only needed to raise about another $5 or $6 million from the markets, which we did. We actually raised about 10 at 20 cents or 22 cents, I think. And that really got us going. And I never forget I got a call from James McToo, who was our banking liaison in Perth, James, and he said, oh, look, you're lending so much money, $46 million, so much money, that you've got to go and see Alan Moss. And I'd heard about this guru, Alan Moss, and so I actually had to eyeball Alan Moss, and so I was a sort of, 35 years of age, very, very nervous, or a bit older than that, 39, and walking in to see Alan Moss, this sort of guru of the banking sector, and we sort of shook hands. He said, look, I'm going to lend you guys $46 million. I want it back. And that really scared me so much that we actually paid it back about 2 years early. And I reckon if I hadn't had that sort of meeting with Alan, I would have taken a bit longer to pay it back. But that project's been a phenomenal success for us. It was an unbankable project without the Chinese. We found the Chinese, they supported us, they've been great supporters. We've made 114 shipments to them in the last 10 years. It was a 4.5-year project. We've been going for 9 years and we've still got at least 3 years to go, hopefully a lot more. They've never missed a payment. They pay within 7 days. They pay 100% of the value on departure. And as I said, all through the GFC, they never have missed a payment. So they've been fantastic customers. We've had some great success. We've extended the life of the project. But, it was one of those things where we had to take a lot of risk. And we relied on our bankers and our shareholders and everybody. It all came together and it's been a fantastic success. And right today we've got great success in exploration deeper down, which I'll talk about in a minute. We then got pretty excited about nickel, and we still like nickel, but it's been a bit tough of late. And Western Mining was selling off a lot of their assets, and we were very keen to get another nickel project. So we approached them, and with the help of our bankers, we were able to secure the old Lanfranchi asset. It had about 2 years of reserves to go, 12,000 tonnes of nickel, and we bought it for about $21 million. We were 75% an operator. The other was some private guys, Ian and Lee Junk, who'd made quite a bit of money out of Mincor, and they were keen to get involved with us. And so with the two of us, we joined up and we operated that asset. We were so lucky, about 2 years into the asset, we drilled a hole, a little bit like Mark Bennett at Sirius, and we had 115 metres of 2.5% nickel straight down the guts of a new discovery called Deakin, named after the female geologist who was running the mine at the time, Caroline Deakin, and that really set us alight. And that asset, is still running today, 6 years after the ore body should have been exhausted. Been a fantastic asset for us. We made a lot of money out of that one, and again, Western Mining and then BHP now have been a great customer. They had a very tough time when their smelter, had some problems some years ago, and they never called force majeure on us, and they've been, great customers all the way through. So Jingshuan and BHP Nickel West have really helped, Panoramic to stay on the map. And obviously we hope to have further success there as well. A bit of history in terms of our cash flow. Very, very strong cash flow. Obviously, even in today's market, we're still making cash out of this asset. And what I can show you there is some interesting statistics. Since we started the business, we had 45,000 tonnes in reserve at Savannah, and 12,000 tonnes of reserve at the Helmet South ore body. So that was really about 65,000 tonnes in reserve. To date, we've actually mined 113,000 tonnes, and we're going to add obviously this year's or last year's production to that. This is the end of 2012, plus 30,000 tonnes of copper and 3,000 tonnes of cobalt. Represents about 20% of our revenue, so very important to us. We've generated nearly $2 billion in net revenue over that 9-year period from these two little assets that nobody wanted. EBITDA of nearly $750 million. Cash flow from the operations nearly $700 million, and this is not including this fiscal year that's just finished. A net PAT of nearly $250 million. Royalties of $82 million we've paid out to the state government and to traditional owners. Income tax paid of $62 million. I think someone in the government said that the mining companies don't pay tax. We pay tax. Exploration, we've spent $60 million on exploration on those assets over the last 9 years, and in total we only raised $80 million in equity. And we've reinvested nearly $500 million back into the business. And the next slide I think is really important, that we've actually paid out over $105 million in fully franked dividends. So we've actually paid out $25 million more than we've raised in total equity as a fully franked dividend. So if you're an investor at the IPO, 20 cents, you've had 52.5 cents back in fully franked dividends, and you've still got your equity intact at the share price at 20 cents. I won't tell you what it got to before the GFC, $6.21. It is a memory, and it's sort of embedded somewhere in my head there. I didn't sell any shares at $6.21. My wife still reminds me of that. But, you know, such is life. We're all in this room, I'm sure, can tell a similar story. So, look, we have been a very, very successful business, but history is history, and what we've got to do is we've got to move into the future. I read a very interesting book some time ago, one of those ones you pick up at the airport. Jason Jennings, I recommend it to all of you, The Reinventors. And one of the things it says is every 5 years you've got to reinvent yourself, and we are certainly going through a reinvention. We've been going for 12 years, so we're into our 2.5 times reinvention. And we are reinventing ourselves. We've been through a fantastic up cycle and then a down cycle and then another up cycle and then another down cycle. So, you know, like everybody in the room, we've made some money, we've lost some money, but we've survived, and we're here to live another day with a good asset base and some great people. So what are we going to do going forward? Well, firstly, we're going to look after our people, and safety is the #1 value in our business. We did lose our way a bit on safety for a while, and one of the things we have done just recently is gone back to basics, and we've had a phenomenal change, I think, in the culture through just going back and just looking at the process and what our work practices are, and just really investigating not so much the incidents but the near misses. And really I think that's been very, very powerful, reporting the near misses and going in and actually having a look at what caused them, because someone once described it as a bit like Swiss cheese, and if all the holes line up, eventually you'll have a serious incident or a fatality. So it's all about making sure that you don't have that Swiss cheese event, and it's actually stopping the incidents from happening, because, as I said, you know, one of those will actually lead to a serious injury or a fatality. And the worst that we've had, I think, is a broken back, and I think we've had 4 or 5 knee reconstructions. And in fact, sadly, most of those guys, I think 3 of them got golden staph in hospital, so arguably you could say it was more dangerous being in hospital than actually having the incident. There you go. In terms of our operations, just quickly, the nickel operations in the Kimberley and down at Kambalda last year just finished. Our guidance was 18.5 to 19,000 tonnes, and we'll be announcing some results on that in the next couple of days. Still 85,000 tonnes in reserve, and cash costs probably today around about $5.50 US, I would think, of that order. We've done some really good work on our costs with the help of some of our own people and some outsiders. The plant we built, as I said before, cost us about $30 million. It's a 1 million tonne plant. I think today, you know, that would cost you well over $100 million. And interestingly, when we did the feasibility study, the nickel price was $3.60 a pound and the currency was 65 cents. So I think that equates to about a $5.50 nickel price, and today the nickel price is about $6.80 Aussie. So only about a 25% difference, but the difference is the cost side of the business. Capital costs 2 or 3 times increased. Salaries probably 2.5 times when we started. So there's going to have to be some readjustment, and already you're seeing that. We led the industry back in November of last year. All the directors took a 10% pay cut, and senior executives, and we asked all of our staff to take a 5% pay cut. And we did that in November. Most people are only starting to do that now, but we were much more aggressive because the nickel price was quite soft, and we didn't lose one person when we asked everybody to do that. So, we do have a history of cutting costs when we need to. The upside for Savannah is good. We have a good ore body below the 900 fault, we believe. So that's the future of that project. Above the 900 fault, there's still about 3.5 years to go. But again, we have to make sure our costs come down so that we can be competitive in this new nickel price paradigm. Lanfranchi, as I mentioned before, we bought that from Western Mining. Now we sell that to BHP. It's ore, so we truck it up the road. Basically, we produce about 11,000 to 12,000 tonnes of contained nickel. So we don't have our own concentrator. We truck it up the road, as I said, and we sell that to BHP. Been a great customer. Ore reserves to 2016. The more drilling we do there, the more ore bodies we discover. We had a small drilling program last year. We pulled out the Jury Metcalfe discovery, 6,500 tonnes of nickel, another sort of 6 to 9 months of production. So once you're in these channel structures, these komatiite channels, you seem to find more mineralisation, and we continue to do that. We have worked hard on our costs, as I said. Those graphs are actually total costs, so they're in millions of dollars, and you can see that we were actually starting to get reduction in cost over 12 months ago. So we were working very hard because the nickel price did obviously fall a lot more quickly than some of the other commodities and earlier. It always seems to do that. And so our cash costs, we needed to get them down. So we worked hard. We went to all of our suppliers. We said, look, we've all taken a pay cut, anywhere between 5 and 10%. Can you help us? And it's amazing when you actually take some pain yourself, your long-term suppliers come in and give you a hand as well. And most of our long-term suppliers gave us anywhere between a 3 and a 5% pay cut, a supply cost cut. And if they didn't, we went out to tender. And in one particular case, it's quite funny, the guy said, oh no, I can't give you anything, it's just very, very tight. So he heard that there was another supplier on site quoting, and materially, a 10% reduction appeared. And the new group came up and offered us 20%. So unfortunately, that incumbent supplier doesn't supply us anymore. So there is capacity within industry to give back some now. But if you take some pain yourself, it's a lot easier to ask your suppliers to do the same thing. It's been difficult to do it on our own. And I do acknowledge Rob Jordan, who's in the room on my table here from GPR Delaher, who's acting as, I guess, really a consultant to our business. He's come in with his group, and they've done a lot of work on our processes and procedures. And like all businesses, we got a bit fat, dumb, and what's the other word? Fat, dumb and happy, right. So what we have to do, instead of being fat, dumb and happy, we have to be slim, smart and happy. And Rob and his group are helping us do that. We've let a few people go. We probably had about a 5% reduction in our numbers in November of last year. That was about, all up about 26 people out of about 500. That was tough, but we needed to do that. Plus with the pay cuts and other things, that saved us about $2.5 million per annum. So it's a big saving when you push that through. And then obviously we started looking at systems and procedures, accountability, and we just found that there was a lot of opportunities. And Rob came and saw me earlier this year after he sort of did his first round. He said, Peter, I think there's 10 to 15% at both these operations. And we all went, how is that possible? And sure enough, roll the clock forward to today, there's 10 to 15%. It is amazing how through the boom, a few extra people, a few extra costs creep in, and you've just got to pull it all back. And it's hard work, but it can be done. And you live to fight another day by doing this. And you can't always do it on your own. So it's great to get some help, some advice from outside. And Rob and his team have done a fantastic job. So Rob, thanks for that, and it's been good fun working with you. This is an interesting slide. What does the currency do to our business? Already the currency, the difference between 103, which is what it averaged last year, and 92 or 91 cents today, is about $25 million of additional revenue for no extra tonnes of nickel. So you haven't got to mine the ore body any harder, haven't got to do it with any more people, haven't got to do anything, and you get an extra $25 million a year. It's a big number. The difference between us making a profit and a loss is that currency. As I said before, I think the currency is going lower. So, but that just gives you a bit of an idea. So, 20 cents, which I think is probably likely. 103 to 85, 83 cents. That's a $50 million turnaround in our business. So that's a huge. And most base metal, iron ore, gold guys are all in the same boat. So it makes a huge difference, that currency. Our currency's been overvalued for 2 years. We've all had a great time travelling overseas and stuff, but that's come to an end. And we need to have a lower dollar. And I just wish the RBA would have made the decision yesterday. They obviously deliberated about it for a while, as Mr. Stevens told us all yesterday. But clearly we need a lower dollar, and I think it is heading in that direction. I think once the dollar settles at the new level, whatever that is, you will start to see some overseas buyers coming back into our sector in the equity space. They've definitely been holding off, waiting for that currency to drop. What's the nickel market going to do? I mean, I've been in the nickel business for 26 years. It really is the devil's metal. It's great when it's great and it's terrible when it's terrible. And there is a lot of supply coming on stream now. Unfortunately, when the nickel price got to $20 a pound, everybody started to develop nickel, laterite, sulphide, anything you like. And unfortunately, all that capacity is there. It's been built, been financed, and it's now starting to operate. And you've got Goro, Amber, Tovi, Koniambo, Barrow, Alto, there's just 10 different projects. All the nickel pig iron that used to be nothing is now 300,000 tonnes. It's all got to be absorbed into the market. It's going to take some time. So I expect nickel prices to be soft for quite a while. I think longer term, my sort of read on it at the moment is 90% of the world's nickel is actually underwater. The only people that are really making any money at the moment is Norilsk, because it's a byproduct of the platinum palladium, but pretty well everybody else on a full cost basis is actually probably underwater. There'd be one or two exceptions there. So fundamentally, we need a higher nickel price, but we have to absorb this demand, absorb this supply. Demand's got to get better, and then things will turn around. And I think longer term, nickel, $8 to $9 a pound is probably where it lands, but that could be 2 years away. So we've set our business up now for lower nickel prices for the shorter to medium term, in the $7 to $8 range. Can the nickel price go below the current levels? Yes, it can. And can it rally quickly? Yes, it can. There's the China story, there's supply, demand. It's all got to work its way through, but it is tough at the moment. And for us in Australia, the real saviour, I believe, is obviously getting our costs down, becoming slim, smart and happy, but also the currency being lower than it is today. Okay, so in terms of what else we're doing, talk a little bit about some of our advanced projects. Gold, I still like gold. I think gold, probably settles around these levels. With the currency at 85 cents, again, we're talking about a 1,500 Aussie dollar gold price. We did all of our original sort of benchmarking at 1,500 Aussie, so that's not a bad price. Can the gold price go lower? Sure it can, it's just a number. But fundamentally, we've got 2 advanced gold projects. We could bring them into production. Right at the moment, what we're doing is just getting them run ready. So we'll finish the feasibility studies by the end of this year, and we'll have them ready to go when we know where the gold price and the currency is going to be. And I think, sort of by early next year, we'll have a much better idea of where the currency is, and hopefully, what China's doing, where the US is, and hopefully a bit of an idea on QE3, and therefore what the gold price might do longer term. And obviously what the great news will be is that capital costs will come down, operating costs will be lower, and so you can basically develop these projects in a different sort of environment than what we've had for the last 5 years. The Gidgee project, some of you will know that project. There's a couple of options there. The little graph there on the side, the little chart there is 3 small underground ore bodies that we could mine, run about 7 grams per tonne. There's an option to produce concentrate there and just mine at the rate of about 200,000 or 300,000 tonnes a year, produce a high-grade gold concentrate and sell that. The other option is to actually produce open pit and underground and probably go to about 100,000 ounces a year. We're studying all of those options, and as I said, by the end of the year we'll have a bit of an idea on that. There's also the Mount Henry project we bought from Matsa, much bigger project, probably a 2 million tonne a year plant. Scoping study was around about $175 million of capex. That number will definitely come down. Operating costs will come down. And I think that project, when we do the final feasibility study, will look quite attractive at 1,500 Aussie dollar gold. The gold market, as I said before, I have no idea. I think we have experienced a very nasty rout in the gold price, the worst since the 1970s. It probably is oversold, but where it lands in the medium term, I'm not sure. I just think the Aussie dollar gold price will be better than it is today with the currency coming down. A lot of today's production is marginal, as we know, on a full cost basis, capital, OPEX and financing. So there will be a bit of a shakeout. And obviously, the better quality assets survive in the tougher environments. But I think 1,400 to 1,500 Aussie dollar gold is not unrealistic, and we should be able to make good money at those sort of levels. PGMs, a bit of a strange one, but I've always liked platinum palladium. One of the great things about I guess the growing use of motor cars is we have to have less and less emissions. And to do that, you've got to have catalytic converters, palladium and platinum for diesel and petrol. And you see demand, getting stronger and stronger, but supply getting more and more troublesome, especially out of South Africa. Last year, production of platinum palladium in those countries was down, or in South Africa was down 10%. A lot of issues with regard to reinvestment there, social unrest and all the other things. I think South Africa struggles in terms of its platinum palladium production for a while, and there's an opportunity for these platinum palladium prices to improve quite significantly. So we've tried to position ourselves a bit ahead of the price run to buy two assets which are going to be run ready to develop when those prices improve. So we've got the Thunder Bay project, which from the takeover of Magma, which is a nice part of the world. It's 50 kilometres from the town of Thunder Bay. It's 11 kilometres from the grid. There's a big workforce there, well located. There's the Canadian nickel smelters that can actually treat the platinum palladium material there as well. So there's a good opportunity to develop that project. It does need a more eloquent back end, and so we are in discussions with some industry players about how we might be able to produce a product, a little bit like we did with the Jingshuan, basically tailor-make the end product to the customer. And so we're doing a bit of work in that area. But I do like that project. The Panton project, which used to belong to Platinum Australia, we bought that off them for about $5 million in cash about a year or so ago. It's 60 kilometres from Savannah. The benefit there is you've got a project which is operating. There is an option you actually could treat the ore at Savannah, truck it up the road and put it through the mill there, or just use Savannah for the infrastructure for the village and in terms of the construction. So a lot of synergies there. We've got a good relationship with the traditional owners in the Kimberley. We've got relationships already established, and so we are an operator in the Kimberley. So we believe that we do have a sort of an advantage there, synergies, but also operating advantage. And to develop a project in the Kimberley now, in the old days it probably took 18 months. It's probably a 3-year exercise to get the approvals now. So again, having operating experience there, same people, know the process, can get that through the government when that's required. That could produce 80 to 90,000 ounces of platinum palladium. So again, I mentioned the platinum palladium markets. Catalytic converters really are where a lot of the tonnage goes. If the prices of platinum palladium were to double, the cost of that catalytic converter probably only goes from $300 to $500. So it really doesn't affect the end cost of the motor car, which was very different to what happened in the nickel business. When the nickel price went from $20,000 a tonne to $50, a lot of people started to design out of nickel-bearing stainless steels, and that really was demand destruction, which we don't recover very quickly. I heard the story where the guy from IKEA, I think he's the richest guy in the world, he actually sat down when nickel went to $50,000 a tonne. He said, "Why are we buying all this 1880, 8% nickel stainless steel for all these kitchens and bar stools that people chuck away after 5 years? We don't need to use high quality stainless." So they designed out all of their sinks, all the stuff that they have stainless steel, from 300 series stainless to 200 series stainless, and we lost 40,000 tonnes of demand. Now that's of stainless, 300 series stainless, which at 8%, you're talking about a lot of nickel. So they're the sort of things that happened. I don't see the same thing happening in platinum palladium, even if the price is double. So I think demand is going to be very good there. Emission controls are going to get tighter. Obviously, big demand for motor cars in China and Asia. And I really feel that the outlook for platinum palladium is very, very, very solid. And we will see higher prices. And our projects will be run ready for those. So what's the outlook? I think, in terms of our priorities, as I mentioned before, safety is the #1 value in our business, and we are absolutely, it's not a priority because you can always change priorities. It's a #1 value in our business. And as I said, we are always refocusing on safety. We spend a lot of time on hazard identification, as I said before, looking at near misses and understanding those. We are really focused on our costs. With the help of consultants and the people in our business, we are really working hard to get our costs down. And the run rate is there. We have shown already we can pull our costs in, and I think there's a lot more work we can do there that you will see in the coming quarters that we report that the costs will be coming down. We have to optimise production, that goes without saying, and I think those two things go hand in glove. We have to keep converting resources to reserves, and we have to keep adding to our resource base. We chew up nearly 20,000 tonnes of nickel every year just in our mining and milling process. So we have to really keep replacing that, and that's a very, very big thing that we need to do. It's tough when commodity prices are low and everyone's looking at where they can cut costs, because one of the first things you do is you stop exploring, and that's a bad thing to do if you're a producer. What are the lessons that we've learned as a business? look, I think one of the things I've learned is you raise equity when you can, not when you need it. You know, we should have gone out and raised $500 million when our share price was $6. But, you know, we thought the share price was going to $10, so we didn't. And a lot of the time our shareholders said, oh, well, you know, what are you going to use the money for? So, you know, it was kind of like trust me money. But, you know, if I'd had my time again, I would have gone out and I would have punched that stock out and, you know, it'd be happy days today. It's always, at the moment, everyone seems to need money and our share prices are all really, really tough. So it just makes it very difficult. So, you know, there's a lesson there that I've learnt. Financing, I'll put up there, beware of the stack and roll. When we did our financing with Macquarie Bank and Standard, one of the problems that we had there was that we were developing a project which had I think it was a 4-year mine life, and there was a 3-year payback of the loan. So they wanted it to be hedged. So we hedged 50% of the production at $9,000 a tonne, and it was a stack and roll because you couldn't go out more than 15 months on the futures. So we stacked about, I forget, it was a lot, 30,000 tonnes, no, can't have been that much, maybe 20,000 or 15,000 tonnes of nickel at 15 months, and then we had to roll it. The problem was it went into a backwardation, and I said to my CFO one day, if we keep rolling this stuff, it'll be negative soon. And we were making all this nickel, and the nickel price was, you know, $40,000 a tonne, but we had this hedge that was 9,000, 8,000, 7,000, 6,000. So we did the old Roswell. We sat down with a whiteboard one day and we said, this is going to turn into a complete cluster if we don't do something. And we got an old colleague of mine, Alan Evans, who'd been a bit of a hedging guru, and my CFO, myself and Alan sat there one afternoon and we sorted it. And we basically sat down with the bankers and we worked out a structure that would get us away from this horrendous situation of actually having this hedge that was going to eventually blow us up. So a massive lesson learned there. Safety, as I said before, back to basics. Now, we went through a process of having, you know, in-house safety manager in Perth and an assistant, great people, but unfortunately we sort of got ourselves buried in the detail and we almost forgot about the process, which was looking after our people and making sure that on the shop floor people weren't doing silly things. And actually, since we've gone back to the basics, our LTI frequency rates come down. I think we didn't have an LTI last quarter. I think the quarter just gone, we might have had one that wasn't one but's come back as one. But basically, we've gone from having 2 or 3 LTIs to none, and it's back to basics. It's just been fantastic. Hire the best people that you can. That was very tough during the boom because people were expensive and there were so many options. It was actually hard to get the A team, the B team, the C team. Even often you only had to go to the D team, and that was tough. We actually went through a process of training up a lot of people, getting people pretty inexperienced and training them up on trucks and then loaders and then finally on the jumbos and stuff. And that's been good, but it takes a lot of time. And, you know, we've avoided using contractors just because we wanted to, not because they're not good, but because we knew we had the mine life and we wanted to create a culture that was unique to Panoramic, and I think we've done that. And one of the things is, you know, if you go to your guys and say, look, when times are good, here's a bonus, you know, here's a present for all your good work, those people, when times are tough, they will actually suck it in and they will take the 5 or 10% pay cut because they know that you've looked after them. It's a bit more difficult to do that with a contractor because they're working for a different company. So that's been a good thing for us, and we've actually, you know, a lot of the people in our business, we've got 80 people that have been with us for nearly 10 years, which is not a bad effort because we only started, you know, producing nickel 9.5 years ago. So a lot of people at Savannah have been with us since we started and are still there. Get to know your customer. As I said at the outset, Jingshuan and Western Mining BHP have been great customers of ours. We spend a lot of time sitting down with them, going through the production profiles. If there's a problem, we stay in touch with them. I'm off to China on Sunday to see Jingshuan. I go every year, even if I've got nothing to talk to them about. It's really good to go and see them, see how their business is going. I'm dying to know what they think of the nickel price, how their business is going, you know, how important our feed is to them going forward, what they think of copper, what they think of, you know, platinum, palladium, because they make all those things and they're on the ground. And so having that relationship with the customers, one of the great things we did when we got the deal with Jingshuan, you know, I don't speak Chinese, and I actually said to the Jingshuan guys, can we have one of your guys in our office? Because, you know, we want to sort of have them there. Really, I wanted them there so that if they didn't pay their bills, I had someone to bang on their head. It was a really good relationship. Yiman's been in our office for 8 years. His daughter works for us now. She's an interpreter. And that's been a fantastic relationship. And they've understood our culture, we've understood theirs, and having that person sort of almost embedded in the system has been fantastic for us. And finally, all your stakeholders. And that's a lot of you people in this room here, the brokers, the bankers, the investors, the retail people. I take every call from a shareholder. Doesn't matter whether they've got 500 shares or 5 million shares. I take every one of those calls, and if I'm not there, I always call them back. And I'm absolutely, that's very important. We've got 5,200 shareholders. I hope they don't all ring me one day, because I'll take a few months to get back to them. But I do actually call every shareholder back. And if there's any in this room that you've called, if you've got through or you've left a message, I will definitely call you back. It's so important, especially in the tough times like now, when the stocks are, are tough and people really want to talk to somebody, because fundamentally they want to be sure that you're okay, and they want to speak to the person who, and they don't necessarily want to speak to the person on the front desk. They want to actually speak to the guy who's holding the reins, And I'm holding on, I've got the whites of my knuckles there like that, but we're getting through it. It's been tough, but the last slide, or the last point on that slide, is you've got to have some fun too, As my old man says, you're only here on holiday, so you've got to have a lot of fun. I've been in this business for 12 years, and I thought I'd probably be there for 4 or 5 years, and that'd be the end of Savannah, and Lanfranchi would last for 2 years, and we'd be taken over or something. Well, here I am 12 years later. I've had 3 children since then. I'm still married, and I've had the share price at $6.20. I've had the share price at 12 cents. So I've lived the dream, and I've experienced the highs and the lows, and I think it's made me a better person. It's made me a better manager, and it's also meant that we've got a great little business, and we've had some fun. Our shareholders have made some money, and I think they will again in the future with the assets that we've got. And as I said, it's been a fantastic journey. I've been blessed with the opportunity to actually get something going from an IPO and still be there 12 years later. The average, I think, tenure of an MD is about 4.7 years. So I'm 3 times now. So I must have done something right, or everyone's too scared to get rid of me. I don't know. But it's been good fun. But look, thanks for your interest, and I guess I'll throw the back to you.